guys, it's Dave again. Thanks so much for watching. I hope all my American friends had a nice long weekend, although I still am a little salty that I was surprised to find the markets were closed and I didn't get my fix of those red and green numbers I always like to watch every day. But if you didn't have a long weekend, I hope you enjoyed your weekend. And today what we're looking at is BlackSky. Now, I've had several requests to look into this company. I was planning to look into it anyway, as I'm kind of looking into a lot of the new age post-SPAC space companies. And this one in particular plays in the same kind of area that Planet Labs does, which is a company I am invested in. So I think it does make a lot of sense for every Planet Labs investor to know the competition and know BlackSky as well when you're doing your due diligence and your research in making an investment. So let's take a look together and see if I think BlackSky is worth an investment or if I think it's too risky. Before that, though, if you haven't subscribed yet, I hope you'll consider subscribing below by the end of this video, and every like and comment always helps out with the algorithm. Thanks so much. With that out of the way, what we're going to do is first dive into a brief overview of the company, what they do, how they work, what their history is, get everyone on the same page. Once that's over with, we will look a little bit at the financials and the valuation and see how I think their financial situation is looking, and if I think like the stock looks cheap here or if it's still too expensive for my taste. In today's rapidly evolving world, the demand for timely, accurate, and actionable geospatial information has never been greater. Founded in 2013, BlackSky has established itself as a key player in the realm of Earth observation, delivering valuable insights to a diverse range of industries and government agencies. BlackSky operates a constellation of high-resolution imaging satellites that capture detailed imagery of Earth's surface. The collected data is then processed and analyzed using advanced analytics and AI algorithms, transforming raw imagery into actionable intelligence. Through a SPAC in September of 2021, BlackSky became a public company trading on the New York Stock Exchange, ticker BKSY. The business combination grossed over $280 million in capital to fund BlackSky's growth plan. At the time, BlackSky Global Constellation had 7 satellites in low Earth orbit, although several more have been launched at this point. In January 2020, BlackSky received a contract from the U.S. Army to prototype satellites with 50-centimeter resolution. They also announced that 16 of the second-generation satellites would be launched before phasing in the third-generation units. The Earth observation industry is quite hot lately. Key competitors to BlackSky include Planet Labs, Spire Global, Maxar, and Airbus. However, demand for these services is rising also, with the global market for Earth observation expected to almost double from $7.7 billion in 2021 to $14.1 billion by 2030. This means there should be room for more than one winner in the space. BlackSky's geospatial intelligence solutions cater to both government and defense, as well as commercial sectors. Some of the markets for their services are as follows: defense and intelligence, infrastructure and asset monitoring, environmental monitoring, financial services, location-based services, as well as some future plans. BlackSky has ambitious plans to expand its satellite constellation and enhance its analytics capabilities. The company aims to launch additional satellites, increasing both the frequency and coverage of its imagery. This will further improve the timeliness and accuracy of the geospatial intelligence provided. Additionally, BlackSky is investing in advanced analytics and machine learning technologies to extract deeper insights from its data. By leveraging AI algorithms, they seek to enhance the automation of analysis, identification of patterns, and anomaly detection. BlackSky's growth strategy also includes fostering partnerships with other satellite operators, data providers, and analytics companies. There have also been several interesting headlines coming from the company recently, including an announcement that they would team up with competitor Spire Global to provide an AI-driven maritime custody service. This new service will use Spire's radio frequency satellites to detect emissions from maritime targets, aka the tip that this boat isn't where it's supposed to be. Then this cues BlackSky's imaging satellites to take a closer look to identify illicit activity, smuggling, sanctions evasion, and national security risks. BlackSky also just recently announced that they had secured a new $30 million contract with an international defense sector customer for on-demand, real-time, high-frequency imagery services. And while yes, this is a nice win for the company, $30 million is not the kind of massive contract that can change the trajectory of an entire company. On the negative side of things, since going public in 2021, BlackSky shareholders have seen the price of their shares plummet from $10 per share all the way down to the $1 to $2 range. The big question for today is, does this low price represent a buying opportunity, or is it a sign that the company is in deep trouble? Let's go ahead and take a look together. Okay guys, so with that out of the way and all of us now on the same page on what BlackSky is all about, let's take a quick look at some of their financials as well as compare them with some competitors in the same Earth observation space, see how these companies differ and where their strengths and weaknesses lie. So first of all, just some basic tracking I like to do with any post-SPAC company. It's always very handy because they all made predictions 5 years out for what their revenues would look like when they went public with their investor presentation. And I love to just see, are they doing what they said they would do? Can I trust this management team? And if they say something in the future, can I believe that based on what they've done in the past? So looking at this, we can see the forecasted revenue numbers were in blue here. The blue columns, and the actual revenue that they've so far executed on is the red line. And now they've updated their forecasts since that go public date, as companies always do. Every quarter, every year, they give updated forecasts usually. And now we can see with this dotted line, the updated forecast is clearly a lot less than it originally was when they were going public. So it's looking like it's actually less than half the original forecast for you. So looking at these numbers, the funny thing is, it's not really that bad in terms of year-over-year growth if we look at the actual numbers. Like we're looking at, 22 million to 34 million. That's still a pretty solid growth. That's probably about 33% right there. 34 million to 65 million. We're probably looking at like 90% growth right there. So really solid growth numbers mostly in terms of their actual revenues so far. And yet nowhere near what they told us they would be making. So either something went very wrong, or I think more likely here the management team was just like way too optimistic with their projections, possibly trying to, get a lot of excitement going around their SPAC, raise as much money as possible, that kind of thing. But yeah, so many of these space SPACs had like sky high predictions or space high predictions, I guess you might say. And they never executed on it. So this makes me a little uncomfortable in terms of trusting management forecasts going forward. Because looking at the dotted line, how do I trust that that's what it's really going to be? And they're not going to miss that just like they missed these numbers. But with that being said, the actual growth is still pretty decent, even if it's less than what they told us it would be. And then I just wanted to compare BlackSky with some competitors in the space. So we have Planet Labs and Spire. They're two other big Earth observation plays in terms of, satellite operators. Wanted to just see the trajectory of these different companies, how they're doing. As I've said before, I am invested in Planets, but I'm going to try to be as unbiased as possible. And my position in Planet is still very small, more like, just trying it out, I guess you might say. So we can see on the left here in terms of how fast their revenues were growing. We only have about 3 years of data to work with because they all came public fairly recently. But BlackSky has been growing revenues pretty consistently. A little bit of a disappointing 2021, but they really made up for it in my eyes in 2022 in terms of that big revenue growth number. Now, Spire actually lost. Their revenue dropped in 2020 versus 2019, but then they shot right back up in 2021. 2022, still pretty good there. So Spire looks like it could be an interesting company as well, something I'll have to take a look at in the future, but of course this is only one metric. And there's a lot more that goes into a company. And then Planet Labs, of course, the one I am invested in. We can see, between 2020, they had 18% growth. 2021, 16% growth. 2022, 45% growth. So that number is kind of what I'm looking for here. I'd like to see 30+% revenue growth, year over year compounding for companies that I'm investing in if I am incurring risk. However, on the right, looking at the cash position of these companies. Now, they all raised a lot of money after 2020 and 2021 when they went public, but we can see that Planet Labs raised way more cash than either BlackSky or Spire Global. And this is one of the reasons why I went for Planet Labs as an investment. I found their cash position to be pretty secure. They're still sitting on over $400 million of cash, whereas a BlackSky here, what are we looking at? $72 million. So to me, BlackSky is in an uncomfortable financial position. And if you invest in it, you have to probably be prepared for some share dilution down the line. Something I'm not always completely comfortable with, but it really depends on the situation of the company and the market out there. But the one thing is that these companies are so low right now in terms of share price, a little bit more painful to be diluted at these low levels than, say, if we were still up, $6 or so a share. Just a few more charts to show you here before I kind of sum up my thoughts. So because I'm not as much of an expert in BlackSky as I am in, say, a Rocket Lab or a company like that, I don't have my own revenue forecast. So with Rocket Lab, I actually went through and said, okay, I think they're going to make this much money in 2023, this much 2024, 2025, etc., as well as made an estimate on how much of that would be profit versus losses and all that. Because I haven't gone that deep in BlackSky yet, unfortunately, I'm just going to have to go with the analyst estimates for some forecasts for the company, which is always a little bit risky. I don't like to do it. I think if you're ever going to make a huge position, you should try to figure out yourself how much money and profits a company is going to make down the line. But for our purposes here, we're just going to look at the analyst estimates. So we can see in terms of earning and revenue growth forecast, they're expected to get profitable after 2025. So this looks to be late 2025, perhaps early 2026 to get profitable. They're sitting on a cash cushion of about 70 million. They're burning capital right now. So I don't think they can make it to profitability without raising additional capital. Obviously, we saw what happened with Virgin Orbit. That was a bit scary. I don't think BlackSky is in that kind of a situation. They probably could raise some money. It might come at the expense of some difficult dilution for shareholders. The management seems to be trying to address the issue. They're looking at raising additional debt and changing the terms around some of their financing and stuff like that. But something you should very much be aware of is that the company will probably stay the same in terms of, like, say you have 100 shares in BlackSky, all of a sudden your shares are going to be worth a slightly smaller slice of that BlackSky pie. In terms of future growth forecasts, it's actually pretty impressive. In terms of revenue growth, we're looking at 35.4%. So that's above the 30% mark that I like to see at least. So in terms of revenue growth, this could still potentially be, in my wheelhouse. Yeah. So this is the revenue chart I was able to pull up through my brokerage, what the analysts are kind of projecting. Unfortunately, they only go out to 2027. I like to go out longer term than a lot of these analysts do, at least 5 years from today. So we're in 2023. I'd like to see 2028 whenever I make any estimate. I just find long term you'll do better than trying to, predict short-term trends. They're looking for almost $1.5 billion in revenue in 2027. That presumably is about a 35% compound annual growth rate. And if they can sustain that as well as keep their margins solid, that should, bring in a decent amount of profits. To make a final say on this, I would really want to make my own spreadsheet. That's probably a whole video of itself, going through the numbers, going through my own spreadsheet. This is just a quick first look for you guys. And then net income predictions here. Currently, we're looking at annual net income of negative 132 million. And that's why I'm saying it's scary that they only have 70 million in the bank. So if we're not getting profitable until 2025, 2026, and we have less than a year of cash at the current burn rate, what's going to happen? And they're predicting 2023 will actually have more cash burn than 2022. So that's a little bit scary. And then we kind of jump upwards and start to move towards profitability before they say 2025 here for profitability, but still not quite enough time with the cash on hand. So just some final thoughts on BlackSky, a few things there. So they do seem to be growing pretty well in the government and defense sector, and not quite as well yet in the commercial side of things, which is where a lot of their future growth has to come from. So if I were a BlackSky investor, I'd be looking very closely at making sure they're starting to grow the commercial side of the business and not just the government side. And I think that would be a little bit of a concern for the future as well. Obviously, their cash position, I have to watch closely and hope they can kind of shore up their balance sheet, raise additional capital, and get through until that, late 2025 timeline when they finally get profitable. So is it a good investment? Well, if you're interested in Earth observation, and there is some data to suggest this is a big growing industry, we did see a chart on that. It's almost going to double over the next 7 years. If you're interested in that space, then maybe this could be kind of like a high risk, high reward play. I think I still am fine with my Planet Labs investment. They just have so much cash that they can get through to profitability without diluting and with much less risk to actually going bankrupt. Especially after Virgin Orbit, I'm, even more concerned about this around various companies. The capital from the private markets doesn't really seem to be there like it used to be to support unprofitable space companies. So yeah, I'm perhaps a very high risk, high reward play. The technology is cool. I'd love to dive in deeper into their next generation satellites and some of the things they can do with it, as well as what their AI can do. A lot of interesting stuff there. It's just on the financial side, I'm just a little bit worried about how much money they have. Let me know what you think down in the comments below. If you're an investor, have you looked at their money situation? Do you know, is there somewhere else where they're getting more capital from? And how do you feel about your investment right now? Love to hear from all the BlackSky investors as well as all the Planet Labs investors after seeing a look at one of their competitors. Thank you guys so much for watching. If you haven't already, I hope you'll hit that subscribe button and come back for my next video. I make videos on space and investing topics extremely regularly. I hope you guys have a great week, and I'll see you in the next video. Bye for now.